Good afternoon, everyone. My name is John Steinson, and I'm a professor of economics here at Columbia. I'd like to start by thanking you all for coming to this event. And I'd like to thank the Program for Economic Research and the Center on Global Economic Governance here at Columbia for sponsoring this event. It is my pleasure to introduce to you Lilja Alfredsdottir, Iceland's Minister of Foreign Affairs. Iceland is a small place, and one of the cozy things about Iceland is that in Iceland everybody's on a first-name basis. So even when you're speaking to the president or the prime minister or the foreign minister, you're on a first-name basis in Iceland. So since I'm Icelandic, I hope you excuse me for referring to Ms. Alfredsdottir simply as Lilja. The first thing I want to tell you about Lilja is that she's an alumnus of SIPA. She holds a master's degree in international economic policy from SIPA, so we are particularly delighted to have her back. It's always fun for us to see our alumni achieve great things. Lilja is actually quite new to the limelight of politics. Before she was appointed foreign minister earlier this year, she had spent most of her career working for the Central Bank of Iceland, most recently as the deputy director of the Central Bank's General Secretariat and International Affairs Department. But she had also spent time as an advisor at the International Monetary Fund and as a special liaison to the Prime Minister of Iceland. So with this background as a central banker for the last decade, of course, Lilja is particularly well suited to tell us about the remarkable road to recovery of Iceland since the financial crisis of 2008 and 2009. And so without further ado, I would like to introduce to you Lilja Alfredsdottir.
Thank you very much for inviting me here today. It's a great pleasure to be here. It's a bit like walking memory lane. I haven't been here at Columbia for, I think, at least 10 years, so it's a great pleasure to be here. So the presentation I'm going to hold here today is basically our story, the road to recovery. Iceland underwent a severe economic recession after the global financial crisis, and we had some serious challenges that we had to address. So I want to take you through this trip basically here with me today, and also then towards the end of at the end of the presentation, I would gladly take some questions and hopefully provide you with sufficient and good answers. So I'm going to divide this into 4 parts. First, I'm going to have a short review on Iceland and the global financial crisis, then on the sustainable economic strategy that we put in place, thirdly, on the outcome, and fourthly, what I think are the key lessons to be learned from this episode in Iceland. First, just a few things on Iceland, so you realize on what kind of numbers we're talking about. The population is only 330,000. GDP, gross GDP is almost 17 billion US dollars, so it's not very big. So you understand that a little bit when I go through this story. GDP per capita is around 50,000 US dollars. And we have an independent currency, the Icelandic krona, which is probably one of the smallest, if not the smallest currency in the world. And a very important thing that we're especially proud of, FIFA ranking, number 27th. You know, this is, I think, the greatest thing. So we had a pretty big boom the years from 2005 and to 2008. And we actually felt pretty good during that time, from 2005 to 2007. We had a net government debt almost 0. We were a AAA rated country. We had banks that were well capitalized, they were profitable, they were audited by the Big Five and got a very good health report. We had the pretty high policy rate of the central bank because the economy was doing pretty well and there was very strong growth. And therefore, there was a lot of strong capital inflow, which was the carry trade and also a lot of foreign direct investment. We had, and still have, strong institutions, qualified labor force, well educated. We had just put in place the inflation targeting framework in 2001, which was thought to be, the state of the art in central banking, and we still have the inflation target. And then we were in an environment of very cheap credit globally. And just to give you an example how we were viewed by the outside world, just in June 2008, the IMF said in its report, enviable prospects. And guess what happened just a few months later? So anyway, but I think it's important that you just see this also, basically, what was the status? However, there were some severe economic imbalances emerging. We had a current account deficit in 2008, 2007, 2008, amounting to 26% of GDP. We had all kinds of explanations. This was a lot of FDI investment, and this would all balance. We would have a balance again in the economy, but this was clearly unsustainable. This ended up in a significant depreciation of the currency. And also, I just also want to mention that there was such strong capital inflow that fueled an asset bubble in the country too. And because of these inflows and these imbalances, we started to have a lot of capital outflow as a result of this. I mean, some of the carry traders and some of the investors obviously saw that this was a situation that was not sustainable. And the most probably important thing is that we had a banking system that was 11 times GDP. And they were running into challenges because, as you remember, already in 2007, there was a lack of global liquidity, and it was very difficult for the banks to be funded, especially banks, small banks globally, and coming from a small economy where they could maybe not be expected to have a lender of last resort, especially not in FX. They had a lot of concentrated risk and connected lending. This was not very obvious in the beginning of the crisis because this was basically not discovered until we kind of went into the banking system when the banks were taken over. And another important part is that they had a lot of FX assets on their balance sheet because what they had done, they went out and bought foreign banks. So at some time, they had a lot of FX assets on their balance sheets. But our central bank had problems because the reserve was not basically matching that. So it could never actually work as a lender of last resort. Just to show you the figure, basically how the banking system grew very fast in a few years. This is from 2003 to 2008. So now I want to take you back to October 2008 and explain very shortly what was the situation. So you can see that there is a massive current account deficit. The currency started to depreciate very significantly. We're talking about, in a very short time, about 50% depreciation. This is the net foreign interest income and the unemployment rate. We have a history of very low rate of unemployment, and this is basically what happened in 2008. It just, with the collapse of the banking system and all the imbalances, it just went up very fast. And the banking system basically collapsed in 1 week. 88% of the banking system went under. And in the second wave, a few months later, 97% of it went under. So we're talking about a very dramatic events taking place when a whole banking system of a country goes under. So we felt a bit, challenged at the time, to say the least. However, you always need to think that there's a light at the end of the tunnel, or that there are some solutions. Just to show you basically the scale of this bankruptcy. The accumulated collapse is next to Lehman's, and this is on a world scale, basically. I mean, this is pretty, when you think about it, how can this happen that they can basically fund themselves internationally at this kind of a scale, with basically that the international investors, they know that there's probably not a lender of last resort there. So pretty big. We shouldn't have, And also some comparison here with other countries. It's difficult to see. These are countries that have had banking crisis. This is Japan in '91, Turkey. This is banking collapse that I don't think we've seen that before. So creative solutions were needed. When you basically are in this kind of a situation, you do not have a lot of reserves, the banking system has collapsed, what are you going to do? And when I take you back to the year 2005, we were in a very comfortable situation. We had net government debt, 0 AAA rating, pretty good policies in place, except for this banking system that grew pretty fast. So what we thought in the government was the most important thing at this time was to ring-fence the sovereign. Make certain that the sovereign and protect the signature of the sovereign. That was the only way to go forward. It was pretty obvious that we would not be able to assist the banks. So the only way forward was to ring-fence the sovereign, and that's what we did. Basically, we ring-fenced it, the signature, and the next item that we thought about were the payment systems, that the payment systems would work, and then the banking system, and last were the bank equity. The second factor is very important, that we would not socialize the losses of the private sector. Because if we would do that, we would then acquire that kind of a debt on the government's balance sheet that it would take us years and years to work our way out of it. And the next thing that we did, we basically split the banks into a domestic and foreign operations after they had been put into liquidation, because you needed to sort this out somehow. And obviously they had a lot of foreign assets, but in order to have basically Iceland's economy work, we needed to get the domestic banking system working as fast as possible. And we didn't want any lines in front of the bank, so people, ordinary depositors would be concerned about their deposits. What we did, we needed to put in action some things that had never been done in Iceland before. And the government put in place a legislation for Parliament, which was called the Emergency Act. And it was all about taking over the operations of these banks. Pretty harsh measures, but the only way forward in our view. This allowed the government to appoint resolution committees to work through the liquidation processes and take the powers of a shareholders meeting. This was, to say the least, this was very dramatic actions, but completely necessary in order to get control of the situation. Another thing that was done, deposits were guaranteed. Not with a legislation, but a statement from the authorities that domestic entities would not have to be concerned about their deposits in the banks. And this was done basically overnight, and the new banks opened the day after this legislation, and they were operating completely, and we never even had any problems in our payment systems, even after this pretty dramatic actions. Another thing that we did, because we had so low reserves, we started to kind of temper the reserve outflow, and we had to prioritize who would get foreign reserves. The ones selling skis, for instance, for the Christmas, they did not get reserves to get the skis that they were supposed to sell just before Christmas, but medicine, oil, obviously, and things like that. And I can tell you that in the central bank, the governors of the central bank, they would meet every day basically to go over a list who should get foreign FX and who should not. But in November that year, we put in actual capital controls because of the outflow pressures upcoming and the composition of the balance sheets of the failed estates. So now I want to take you, so these were the first actions that we had to go, and they were all, I'm just going to go back shortly, but these were all country determined. These were all like the initial actions that the Icelandic government went into. And later we went into an IMF program, and I'm pretty certain that it would have been extremely difficult to take on these measures if we were on an IMF program, because a lot of the shareholders and all the bond and all the equity holders, they lost everything. So the second way of actions is we went on an IMF program, which is never very pleasant for any country, but this was the situation and a pretty dark outlook, even though they had said a few months earlier that we had envious, the prospects were envious. The second item I want to mention, we had a pretty thorough structured debt policy going forward, and I'll show you what we did and what kind of approach we had. Thirdly, we had to deal with the failed estates, because remember that we had ring-fenced the sovereign and we had put the banks under resolution committees, where we needed to sort out the failed estates. Basically, I mean, the assets needed to be paid out to the ones that had bought the claims, etc. And that was a pretty big operation too. And then the fourth item that I would like to mention, that we had a lot of carry trade coming into the country, and they were also locked in with capital controls. And they needed to also to go out through the balance, throughout the balance of payment. But the holdings were pretty big, at about 40% of GDP. So we had an IMF program, a very typical IMF program, and then we got bilateral loans from the Nordics, Poland, and the Faroe Islands in order to bolster our foreign reserves. The amount was about $5 billion US, but we actually never used it throughout the whole time. We just basically put it in the central bank, and it was never drawn on. Three main items there: the exchange rate, to stabilize that, and we put in place capital controls, and this was done jointly with the IMF. I will never forget when we were on a conference call and there was a suggestion coming from Washington's headquarters suggesting that we would put in actual capital controls, because remember, I mean, there was a no with the IMF just a few years earlier. But in order to stabilize the exchange rate, that was a necessary operation at the time. Remember, the financial sector was completely, out. We had new banks, the new banks that we established, the domestic ones, and then the failed estates that had the FX assets. That had to be restructured. And then, of course, the fiscal position. We had very little debt, as I said earlier, but it was obvious in order to recapitalize the banks that we would have to acquire a lot of debt on the balance sheet and all kinds of other outlays. So we started restructuring the balance sheet of the banks. It went from being 11 times GDP to about 2 times GDP in 2009 and 2010. So now we have a banking system that serves Iceland pretty well, but is not as internationalized as we had earlier. then there had to be a very good plan in order to get to have a balanced budget. As you see, we were in a very comfortable position in 2007, and then we had to recapitalize the banks, but we wanted to unwind this position as soon as possible. Because when you're in a small open economy, it's very difficult to have a lot of debt on your balance sheet if you want to have good ratings and you want to be able to issue in the international markets. And this, actually, I'll show you that later. This all worked out pretty efficiently. Another item I think that might be unusual is that we were always very cautious on what kind of a debt the government would put on their balance sheet. Also, we realized that the corporates were heavily indebted, and it was almost impossible to get the economy to grow again unless there would be extensive write-offs in the banking system, and then also with the households. They were in a pretty good shape before 2008, but their debt also increased significantly because a lot of households had FX-denominated debt, and also the debt system in Iceland is that it's also linked to the CPI. And the CPI inflation grew very significantly because of the depreciation of the krona. So the government debt went almost up to 90% in 2008, 2009. Now it's under 60% because of, I would say, a structured approach. Always be very careful that we wouldn't put too much debt on the balance sheet of the government. There was an extensive debt program, restructuring debt programs within the new banks. So it went from 260% of GDP and now is around 100% of GDP. And with the households, it went highest to about 126% of GDP and is now around 80. And there were two approaches there. There was also the households that had the most debt, loan to value over 110%. They got everything written off. And then also there was a general house debt relief that was implemented by this government across the board. And that was financed by the banking system and the estates of the banks. Just to show you these in figures, this is the government debt, this is the corporate, and then the household. And I think these are extremely important. If you want to get the economy going again, you need to take excessive and extreme measures on this front, because it's very difficult to stimulate investment and people if they have so much debt. Another item, even though things were going really well, we had to address the estates of the failed banks. That was quite complicated because they had a lot of ISK-denominated assets and also FX assets. And we had to figure out basically how to get these assets through the balance of payment without having a lot of pressure on the currency, because the ones that were the owners of the claims of the failed estates were, for instance, hedge funds that bought it after the collapse. And it amounted to about 30 to 35% of GDP, the ISK assets that they had. And if that would have gone through the balance of payment, we would have used either too much of our foreign reserves or we would have too much pressures on the exchange rate. And that would not have been sustainable and very difficult for the Icelanders to take another hit on as regards to the currency. We used the capital controls to a certain extent just to stop the outflow. And we put them in place in 2008. And they were also very helpful when we were dealing with the failed estates because they couldn't get their assets through unless that they would get an exemption from the central bank. So they were locked in for quite some time. So we basically put in a strategy that worked as the following, that they would not get exemptions from the capital controls unless unless that they would basically feel have us. We put in place the so-called stability criteria that if they would write off or hand over the ISK assets to the state, they would get an exemption from the capital controls. But you might ask yourself, why on earth would anyone hand over assets that amounts to about 25 to 30% of GDP to the authorities? The reason is that they had a lot of FX assets that they wanted to take out of Iceland. So they basically agreed that they would hand over most of the ISK assets to the authorities and in return get an exemption from the capital controls. And we had put in place, if they were not willing to do that, we had already put in place a stability tax that would be helpful if they wouldn't fulfill the stability contributions or the stability criteria, they would have to pay a stability tax. And that was basically the carrot and the stick. The same thing, another challenge that we had to deal with were the offshore krona holdings, the carry trade that was locked in the country and was pretty significant in 2008. It was very difficult also to let them out of the economy unless we would have some strategy in place. And we started auctioning the carry trade out of the economy already in 2008, and then we had a big auction in 2016. And I'll basically show you, these were the offshore krona assets in the economy, very big in the beginning of the crisis, and then we have been auctioning them out, and then there was a large auction in June 2008. So now this amount is about 8% of GDP, and pretty comfortable. And we have taken on all these measures in order also to liberalize the capital controls. One of the key difficulties were the resolution of the failed estates and also the offshore krona. And it was inconceivable for the government not to basically solve this in a sustainable manner without having too much pressures on the exchange rate. And that's why we had to, put in place kind of unconventional measures. So where are we now? How have these policies, have they been successful, or what has happened? I would probably not be here unless we've had something to show for. We have a very good growth now in the economy, 4.9%, and we had a growth of 4% last year, and the medium-term outlook is about 3% or so. The current account is in a comfortable surplus. We have very low unemployment rate, around 3%, and there has been a significant debt reduction. As I've shown you, we've seen a pretty good appreciation of the real exchange, maybe too much, and so it might spoil the competitiveness that we gained. And a very important part is that the net international investment position was minus 120% in 2009 and 2010, and is now almost in a balance because of the actions that we have and the policies that we have implemented. And believe it or not, we are in a net surplus with all the actions that we have taken on, the government. Obviously, a lot of people, though, lost their equities in the banks, and there are losses, but the government is in a surplus right now, about 10% of GDP. And we've started to experience a significant FX inflow, which has increased our foreign reserve tremendously. And guess what? Our old friends that gave us the AAA, remember? They have put us again into the A category because of the policies that we have put in place, because of the growth that is in the economy, and also where we have the debt position of the government. And they were also very pleased with the resolution of the failed estates and that we're taking the first steps to gradually remove the capital controls. Just a few figures to show you. This is the blue line is our growth in the forecast from the central bank to 2018. This is Iceland and other countries, our main trading partners. The debt is going down pretty quickly, and we actually envisage in 2020 that we'll have debt around 30% of GDP or 35% of GDP. This is the current account balance, which has been very favorable for the last few years. And you can see this coincides pretty clearly with the development of the real exchange rate, which has been appreciating. And this is the net international investment position, which has improved tremendously. We were in a similar position as Cyprus and Greece a few years ago. Inflation has also been low. And this is the development of our foreign reserves recently. A lot of inflow, and this also comes because the we have a lot of boom in in the tourist industry, and that has also helped because the external conditions have also been very favorable, which we need to, of course, mention. And we've also benefited from low oil prices and also the low international inflation, which have helped us, and to a certain extent favorable commodity prices. Even though one of the commodities that we export is aluminium and the price there is low, but we have benefited nevertheless because of the low oil prices. But another commodity price that has been high is fish, and we export a lot of fish. So, what have we learned? I would say one of the key lessons is to protect the sovereign by all means, to ring-fence it and make that kind of a policy decision at an early stage. And it also motivates everyone within government that you basically have an aim, and that all the policy decisions that are taken are aimed at that. Because if you start defaulting on the sovereign obligations, it's so difficult to get back into the international capital markets. People say that they forget very quickly, but it was just very important. Another item which is unconventional is the capital controls. They provided a lot of breathing space when we had this intense situation that we had to deal with. They also helped us finance our budget deficit domestically, so we got lower funding costs because of the capital control, so they helped us temporarily. Another thing that is crucial is having extensive analytical work backing up all the policies. We had a lot of balance of payment analysis done at the central bank, first with the assistance of the IMF, but we used that when we were talking to the creditors of the failed estates, basically telling them that it was completely impossible to do the work unless it would be sustainable for the balance of payment going forward. Another item that is very important is a strong political ownership, and that the policies are made also in the capital. You need to have one of your best people working on these policies, because if you only get, which is also very important, to get external advisors. I mean, they come to Reykjavik and they stay for maybe 2 weeks and they hand out a program, but then they leave. So we had, when we were designing some of these key policies, for instance with the failed estates, a very strong group of Icelanders working with us, and then we got external advice from very qualified people like Kruger and Lee Buchheit. And then we worked, even though we were not on a program, but very closely with the IMF on these policies. But a strong political ownership and also a domestic ownership of the policies. The same thing also with, and I have this as a specific point too, a domestic engagement. There were a lot of challenges that we had to deal with. For instance, we had a international dispute with the UK on the so-called Icesave dispute. I don't know if you're familiar with it, but that was, they wanted the sovereign basically to take on the deposits, the deposits that the Icelandic bank had collected, and we should pay them out. But this was extremely big number, and this was also in foreign currency, and very difficult for the sovereign to take it on. And they tried to convince us, they even put us on a list of terrorists for a few days. I mean, that was unbelievable experience, by the way. But and there were like domestic individuals that basically protested this. The government was in a very tight position because both the Nordics and also there was a pressure not from the IMF staff but within the executive board of the IMF. But there were a lot of domestic entities that came and said, this is no way, we're not going to do it. And it ended out in a referendum on this item, 2 referendums. And in the end, the EFTA court ruled that this was not a sovereign obligation. And all the deposits were paid out of the failed estates. But if we had not basically said, no, this is not our sovereign obligation, we would have taken it on the government's balance sheet, our situation would not be this good. Another item is that capital flow management. I think it's very important for small open economies. You saw what happened with the free flow of capitals. The banks were able to acquire all these, make all these acquisitions, and that this came into Iceland's, Iceland's economy. And but just an average hedge fund here in New York, if they want to shorten the currency, it's very easy for them to do it. The policy on this has not been determined within the central bank or with the authorities, but if you have a small currency, you need to be very mindful of the inflows, not just the outflows, but also the inflows, because they can be such strong factor, both putting the economy into a, the balance basically just goes if the real exchange rate appreciates too much. Another item I just want to show you in the end, this was a research done by the Central Bank of Iceland and shows the strong ties between the Icelandic financial cycle and the global counterpart. And look how the US and the Icelandic financial cycle, how closely they are, even from the year 1875. And I think this also shows us how capital in and outflow can be extremely.
What's the vertical axis?
These are the years, and this is also the coefficients that they put together. I can show you that at a later stage. So just to go over the story, we had a severe economic blow when the banking system collapsed. There was depreciation of the krona of 50%, very high unemployment rate as a result of that, very big current account deficit also, and the debt of the sovereign increased very significantly in a very short time period. But what we did, we ring-fenced the sovereign, we put capital controls in place, and we made certain not to socialize the losses of the private sector, and had an extensive debt write-down already and put a lot of emphasis on that. And one of the results that we have after this is we have a pretty strong economic growth, very sustainable fiscal position, and good debt, a very good debt position of the government. So I think these are going to be my last words here at this presentation, but I'm willing to take some questions if you have. Even though we've fared pretty well, there are still challenges going forward, as I mentioned, with the policy on capital flows. We are gradually removing the capital controls, and the economy is growing pretty fast, and we've seen that also before. So thank you.
So thank you, Lilja, for this very informative and insightful lecture. So we've brought out a microphone, and I'd like to ask those of you that want to ask a question to step up to the microphone and ask the question into the microphone. I'll decide to, please step up to the microphone and ask the question. I think Lilja is going to perhaps gather a few questions at a time before she answers. And let me actually go first with a couple of questions as people line up at the microphone. There were two things that I wanted to ask. So first of all, I've always been curious about the importance of the IMF program. And let me elaborate a little bit about that, because Iceland's position was a little bit different from the typical IMF program recipient. A typical country that needs an IMF program has an enormous amount of debt, is about to default on it, and needs a loan. So it's a very simple thing. The IMF provides a loan. Iceland didn't have any debt. It took out a lot of debt, never used it. Mm-hmm. The debt was expensive. So I'd like, if you could elaborate a little bit on what you thought were the important things about having gone into an IMF program. So that was my first question. The second question I wanted to ask was relating to the capital controls and in the long run, how you see things. You mentioned this a little bit, but maybe you could elaborate a little bit on this further. I'm basically wondering, do you think some form of mild capital controls has a role in the long run in Iceland? Before the crisis, we had a completely open capital account. Are we going to go back to that kind of a state, or is there some kind of middle ground that is a more suitable long-run policy for us?
Okay.
Can I make a question?
Yes,
okay.
please.
My name is Roberto Costa. I am a visiting scholar from Brazil. One of the things I sense by your interesting description is how the political system reacted to the crisis.
The political
in my
system?
own country,
Yeah.
the political system never grasped exactly the dimension of the crisis. They are not so sensitive. We in the private sector are looking to the situation very concerned, and it's very difficult to see the politicians mobilized by the situation. I understand that you have a parliamentary system, perhaps that makes things easier. But anyway, with that crisis beforehand, how those politicians that were so deeply involved in that moment, mm-hmm. how they performed after the crisis. They were completely substituted. How the political system engaged in the new moment, and what is the support of population? Because the population, to a certain extent, was being benefited by the boom that
Right.
that was going through. It's probably not easy for them to realize that was a situation that needs to be changed. Those are my questions. How to sensibilize the politicians and engage in the society.
Thank you. So maybe one more, and I'll yes, please.
My question relates to the banks and the assets of the banks. You laid out very clearly how the assets of the banks had expanded dramatically in the period leading up to the crisis. Mm-hmm. I think it was 10 to 13 times GDP. What steps have been taken to prevent a recurrence of that type of situation with respect to banking assets?
Mm-hmm. Okay, so let me start with your questions, Jon. I think with the IMF program, what was a very important element was basically the seal of approval. There was a lot of people didn't trust the system after this dramatic events, and we needed basically a coordinating figure, and the IMF served very well. And I think that we got extremely qualified experts coming from the IMF But I understand also your questions that we got all this foreign reserve and it was expensive. Why did we get it? But you have to also remember that we didn't really realize the size of the failed states. I mean, we were never going to use this borrowed reserve basically to bail them out or bail out the carriage rate. But I think the program served us well in the sense that there was a lot of cooperation between the central bank and the IMF as regards to balance of payment analysis, and they assisted us also, the IMF staff, when we had the Iceland dispute. They basically, took side with us. They never put, for instance, that debt on the balance sheet of the government when they were doing their debt sustainability analysis. Your second question as regards to capital flows, whether we'll have a fully liberalized capital account. What we have already started to introduce are some kind of capital flow management tools. And I think we'll see that in the future. We will liberalize the capital account, but we will we monitor inflows and outflows much better. And we need to do that when we have such a small open economy with an independent currency. And we increased the reserve requirements just recently, and that there was a sudden stop of, at least that's the latest information I have as regards to foreigners buying Icelandic government instruments. With the politicians and how they responded. What happened was that the government that was in place, they resigned 3 months later, and there were general elections held after, because confidence in the country had just vanished. And the new government, there had to be elections, and just to get a renewed mandate. However, there is, even though this was very difficult, but there is a strong will also to have certain political consensus on key policy items. For instance, there was never a debate on the capital controls. There was not a debate how to address the failed estates or the offshore holdings. There was basically a consensus on that. But this was very difficult for the politicians that were in government at that time. Yes, as regards to the assets of the preventive measures, how we're not going to have these banks grow again like this. Surveillance has been increased tremendously with the bank's operations. And we don't envisage that that we'll see this kind of a grow again, because we will not have we will never have a foreign reserve that can serve such a gigantic banking system. And that also, it will be more difficult for them to fund themselves internationally after this experience.
Hi, Lilja. Thank you for the great presentation. My name is Tian and work for JP Morgan Country Risk. My question is, can you provide an update on the latest krona auction in June and also the mechanism of the stability tax going forward? Do you think this mechanism of stability tax will prevent especially hedge funds from investing in Iceland going forward? Thank you.
Thank you.
Hi, I'm Andre. So you mentioned again and again, Iceland is an extremely small economy with a relatively open capital account and an independent currency. My main question is going back. You're very tied. You're sort of excessively tied to volatility in the global economy. Would having introducing the Canadian dollar or the euro as a currency have dampened that, or would it have or would it have hurt the situation, giving up that independence?
Frank Bamberger, just two questions. One question is the psychology and makeup of the people of Iceland. Compared to so many countries, we have so many different groups, so many different territories. But this is a small country, and Iceland always, as I understand it, they work very hard to be Icelandic, to keep the language, for example. Do you think that was a major factor? The other question I just had in research, what are the major products that bring in money, the major exports other than tourism in Iceland today?
So maybe I'll start with your questions. The export base of Iceland comes from the fishing sector, which is about 27% of the export. Then from the sale of energy and the aluminium, which is about 25. Then we have the tourist, but also a newly developed export industry is the innovation industry, which has grown quite a bit in the last few years, almost about 60% from 2009 until 2015. And one of the reasons is that we became very competitive suddenly when the currency depreciated so significantly. So these are basically the four main export pillars that we have in Iceland. As regards to the mentality, it's difficult for me to say anything about our own mentality. The only thing I can say that we were pretty determined that we wanted to get out of this crisis. Well, it's difficult maybe to comment more on that. As regards to the currency, whether if we had the euro or the Canadian dollar, if this could have been prevented, we might have been in a different situation, but I think the key thing here is also that the krona helped us tremendously also going forward because of the, we got basically a new P or a new price, which helped us to grow out of the crisis. It's also very difficult to be, we don't have, our economic cycle has not, even though the financial, when you have these shifts as regards to the financial cycles, but we are not, we often grow faster than some of our European counterparties, and it would not have served us very well to have this low policy rate that we've had in Europe for quite some time. The stability tax was actually never implemented. We used it as a stick in order to get the creditors of the failed estate to accept the stability conditions in order for them to get an exemption from the capital controls. We just had the final auction as regards to the offshore kronas, and we'll see how that develops going forward. Please.
Hi. The fact that Iceland recovery involved the IMF and also capital controls at the same time is not something as usual as, I mean, it's not like the traditional formula involving the IMF. Do you think that the case of Iceland could be replied by other countries in the future, or do you think that Iceland is like a very particular case because of Iceland's size and the crisis of Iceland?
Hi. Can you please elaborate on the transition of localized labor? I suspect that during the boom time there was a transition of labor from traditional industries to financial services, for example, and then transition back to more traditional labor afterwards. Thanks.
Thank you. Mine is perhaps the simplest question of all. What effect do you think the example of putting the 4 bankers in jail had on the recovery?
Yes. So allow me to start with the transformation of the labor market as a result of the financial crisis. We had a lot of shifts also back, for instance, into the innovation sector. We saw a lot of startups, new startups, and this we see in the export numbers, basically on the revenues that come from this industry. So we saw that kind of a development, if that answers your question. As regards to the bankers going to jail, that, what can I say? I mean, that was, I think that we can say that was pretty preemptive, maybe going forward, and that could answer the question whether we'll see these banks grow ever so large and big as they did. But that was also, I mean, that was a challenging task, but they were found guilty on some accounts. I think I forgot one question. Oh, the capital controls and whether we could use these. I actually think that some of the basically conceptual framework around our policies could be used by other countries. For instance, focusing so much on making the debt sustainable, the household debt, the corporate, and focus so much on the sovereign. I think other countries could also apply that. As regards to the capital controls, I think if you have such a situation and you think that that can be helpful and that can also buy you time, I see no reason why other countries could not apply that. However, I think one of the reasons why we could also put in place a lot of these unconventional measures was that, for instance, we were not members of the EU. We did not have the ECB or the Commission basically, in Reykjavik with representatives and saying, I mean, what are you basically doing? So I think that was, to a certain extent, helped us making these decisions, and also it saved time.
Hi, I'm Lucas Martin, a MPA student here at SIPA. I was wondering if you could comment on why you think during the boom years that that this wasn't foreseen, or if it was foreseen, why it wasn't listened to.
Mm-hmm.
Hello, my name is Miguel Jose, work in consulting. So my question is more related institutionally. What do you think was happening when the crisis hit, and how these institutions have been modified looking forward after that, and how you feel these institutions, again, are resilient for the future, how transparent they are, how they communicate with the people, and how accountable they are to the people?
Mm-hmm.
Thank you.
It's a very good question. I mean, how could this basically have grown the banking system this fast? I think you also have to look at the GDP base. When, for instance, one of the banks, Kaupthing, acquired another bank, a Danish bank, FIH, the system just, doubled or something like that, and with one transaction. I don't know exactly whether it doubled, but it grew very fast just with this one transaction, as the base is small. You also have to realize that when you looked at their profiles, all the auditing companies had all signed them off, saying they were well funded. All the rating agencies, even the rating agencies at one point in time, they provided them with a AAA rating. And I basically remember where I was when I heard that. I thought that was just unbelievable that an Icelandic bank would have a triple rating, the same rating as US Treasury bonds. But this was, I mean, you all remember what kind of atmosphere this was. As regards to institutions, this has made us strengthen the institutions, increase surveillance quite significantly as a result of this. Sometimes I wonder whether we're increasing it too much, but that's one of the lessons that we have also learned. I should also put it there that strengthening surveillance institution. So, if there are no further questions, I just thank you very much for coming and listening to this story.